Well, hello everybody, welcome back. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. And in today's video, I will talk about the probabilities and the edge. Okay, and to demonstrate my thoughts, I will do some Excel calculations. Let me open the Excel spreadsheet. Excel is pretty good stuff to analyze the good amount of data, and it is helping a lot in understanding the nature of probabilities. I'm using it pretty often in my calculations and in my simulations as well, because we should not only calculate what happened actually in the history of market, but we also may simulate the future performance of some outcomes. Okay, so what is actually an edge? When we say we have an edge over the market, and the best way to demonstrate this is to use the casino. The casino has an edge over the trader, over the gambler, and this edge is calculated this way. I will draw you an example of, let's say, roulette game, the very best to understand and very fast to draw. This is roulette. Oh no. Okay, it has some cells. Some of them are black, some of them are red, and others are green. So we have black cells, we have red cells. This is red, and we have green cells as well. These cells are situated here, and they are called 0 and 00. It is actually the same if you bet red, or if you bet black, or you will have the same result. Or if you bet even versus uneven, you will have the same result. So let me do the calculations. Totally, we have 36 black and red numbers on roulette, and we also have 2 being 0 and 00. So totally we have a number of 38. The number of possible outcomes equals to 38. If you bet red and you only win when the ball lies in this section of red, yes, and you lose if it gets into the section of black and or into the section of 000, yes. So this means that you red, we have 18 reds divided by 38. Let's do the calculation roughly. What is that? It is roughly 47%, 47 point something, but it doesn't matter. 47% is your probability to win. Okay, but the casino has the same 18 black things, yes, black cells, same as you have red, and it has 2 green cells. So casino has 18 plus 2, 20 winning outcomes when casino wins, and if we divide them by total 38, this equals somewhere around 53%. 53% the casino wins, 47% you win. And when it is said that the casino is having an edge over a gambler, this means this: 53 minus 47. So 53 minus 47 equals somewhere around 6%. Yes, so the casino's edge is 6%. And you should remember that when you bet one, you lose one or you win one. Yes. So this equals the same. When you bet 2, you win 2. When you bet 3, you win 3. Your bets are equal to the casinos. So if you bet 1, casino pays you 1 in case of winner, and you lose 1 in case of loser. So you don't have that risk reward. Your risk reward is always 1-to-1, no matter how much money you will put on the bet. It is always 1-to-1. The casino has 6% edge over you. Okay, let's do the calculation, the simulation of the trades of my strategy. I will reveal you a secret. My strategy is 55% correct if it is traded my way. First of all, it should be identified by the pattern search software, and secondly, the stop loss should be put exactly at X, and the entry should be put exactly at 80.9 Fibonacci level from X to A or X to C if it is a cipher pattern. Let me do the simulation. So first I will need to randomly fill in these cells. They will represent winners and losers. This cell equals random, and I need random between 1 and 100. How many trades we need? Let's say 10,000 of trades. of trades is a pretty large sample size to have a precise statistical data. Actually, the more trades you have, the more reliable is the statistic. And here's the problem with newbie traders and those that aren't trading long enough, that they have very small amount of trades to be analyzed. To my mind, it's not enough to analyze 100 trades. It's not enough to analyze 50 trades. You have to analyze thousands of trades. Okay, so these cells represent the trades, and if you can see this randomly, every cell is a random number from the range of 1 to 100. And let me do it this way. Imagine the total number of outcomes being this line. Yes, from here, sorry, here. This is 1 and this is 100. Yes, so out of 100 trades I have roughly 55, maybe here, 55 winners. So what is in the range between 1 and 55 is my winner, and what is in the range between 55 to 100 is my loser. And because this area is larger than this area, you see, I have a higher probability of a random generator to generate something from this range rather than from this range. You see, I have a 55% probability of random generator to generate something from here rather than from there. Although the sequence is absolutely random, it is absolutely randomly more than 55 or less than 55, absolutely random. Let's do it this way. This equals, if, do some logical test, this less or equals 55, yes, then it should be 1.3. Why it is 1.3? Because 1.3 is my average winner, and if it is not that, less than 55, if it is more than 55, let it be -1, this way. If I double click, it will substitute that this way. You see, all of them, either 1.3 or -1. 1.3 is a winner, -1 is a loser, and the probability is 55. If you don't believe that, so let's calculate the probability. This equals, it will be here. Let's calculate the amount of winners. No, not this way. Yes, count if So the amount of winners within here, within this range, with criteria more than 0. So it will count how many winners we have, yes? And winners should be divided by what? They should be divided by count of total trades, count of the same range. You see? So if we divide winners by total trades, we will have the probability. So the probability is this. Let me do it percentage. 54.99, yes. And if I recalculate this, I'll do another 10,000 trades like this. I'm just pressing F9. So you will see roughly it is 55, 54.99, 55.5, and so on and so forth. I say the larger is the sequence, the more precise is the number of your winners versus losers. See this? Okay, now I hope you understand. And here's what many of you guys do. Let me Control C and let me, oh, what I did, I shouldn't do that. Control C, paste it here. Okay, here's another formula, but instead of being the whole series of one of these trades, let's calculate it from B2 towards B50. We just take only 50 trades from B2 towards B50, the same amount of range. So it will find the number of winners within 50 trades, first 50 trades, the number of winners within first 50 trades, and divide them by the number of total trades within the same range, and it obviously will be 49. Yes, starting from 2 to 50 equals 49 inclusively. Okay, you see this number? It is a bit different from the number above. Let me do the recalculation. Sometimes it is extremely great, 65. So you may have the period of winning. You say, oh, based on my last 50 trades, I am 65% accurate. This is a piece of something. Your risk reward is not more than 55, and 50 trades is not enough. Or you may have it this way, 48. You see, you are trading last 50 trades. What those 50 trades means? On average, if you are a swing trader using 30-minute, 1 hour, and 4 hour trades, you will have somewhere around 25 trades in a month. So you've been trading for 2 months, and you calculated your average performance for those 2 months, and you have only 48.98, 49% roughly. So you may say, okay, I've been trading those for 2 months. Something is not working. Something is going wrong. Let me fix something. And you try to apply some filters that you don't know how will they affect your strategy, and of course it influences the probabilities because the variables change. The variables that consist your edge, they change. Let's do another recalculation. 44. Pretty simple. 61. Good. Good. 55. 59. 61. 53. 44 again. So you simply randomly may face that situation when you have 44. And this doesn't mean that you are doing something wrong. You have to accept that. Okay, let me do it this way, because many of you guys are doing the backtesting of only last 20 trades, and you make your decisions based on them. I will enlarge that range, not last 50 trades. Let's find last 100 trades. Although I strongly recommend you to backtest at least 100 trades, yes, from B2 towards B101 inclusively, yes, we will have 100 trades. Although I strongly recommend you to have this range for backtesting, or more, or even more. Many of you simply check 20 trades and say, well, it works, it doesn't work, so whatever. So you see the deviation. Let's do it this way. What is the deviation? It equals this minus this. The deviation is this. So if you're performing worse than the strategy, your deviation is minus 6%. You see? Minus 6%. And if you're deviating on the upside, yes, your deviation is plus 3%. You see? Minus 6%, minus 12%. You can deviate minus 12%, even less. So your deviation is ranging. And it is absolutely random. You can't do anything about that. The market either goes up or it goes down. It either hits your take profit or stop loss. But because the range of that, the probability of hitting the take profit is higher, that's why randomly you win more often based on large sample sizes. So this is the simulation. Another calculation that is very, very needed for you, you see the ranging. So you range up to 12%, you may range that. You just saw 12% again. Okay. Another thing that is needed for you is the number. Oh, well, let me show you what if you judge your trading based on 20 trades. If you judge it this way, 20 trades, you see? You may say, wow, I am 85% accurate. You see the deviation of 29.9, 30% deviation from your actual. So your backtesting will be lying to you if you only backtest 100 trades. Sorry, not 20 trades. I say that you are to backtest 100 trades per pair per time frame. So this means if you are testing another time frame, you are to backtest another 100 trades, another time frame, another 100 trades, and so on and so forth. And then you are to test the next pair, time frame number 1, number 2, number 3, 100 each, and then you are to calculate them together. How many pairs you have to have that large sample size of performance of how good your portfolio is acting. Okay, let me do some recalculations. What if you base your trading based on 20 trades? Okay, so my lesson to you is this: stop making some judgment based on 20 trades. Start making judgments based on thousands trades. So before you do 1,000 trades, I don't want to listen anything from you saying, oh, this doesn't work, oh, this is not good, and blah blah blah. I don't want even to hear that from you saying this until you backtest 1,000 of trades, until you trade 1,000 of trades, until you have that statistical data. Okay, let's do the one important calculation here as well. This is the number of losers in a row. Actually, what is the number of losers in a row? Sometimes it coincides with the maximal drawdowns, but sometimes it's not. So I will explain you in a second what is it. And to calculate the largest amount of losers in a row, we need to use this formula. So this equals if the result column minus 1. Sorry, if forgot about f. Oh, f. The result column is less than 1. Yes. Then start the count. Preceding cell, the above cell should be incremented by 1, and if it is not a loser, then it should be typed as 0. Okay, then just reset everything from the very beginning. Okay, type it here, And now you can see if it is a loser, we have 1, then we have 2, then we have from the very beginning, because we had a winner. Then we have 1, then we have from the very beginning another 1, then we have beginning 1, 2, 3, and so on and so forth. So the largest number within this sequence, 1, 2, 3, 4, 5, 6, 7, what is the largest number within this will tell me how many losers in a row we can actually have. Here it is, this series of losers in a row, this one, you see, minus, 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 minus 7. It tells 7 because this is the largest number. We won't do it manually, we'll do it that programmatically. So it equals max within this range. Pretty simple. The largest amount of losers in a row is 11. See that? 11 losers in a row. 10, 11, 11, 10, 10. Almost every 10,000 trades you have that. 10, 10, 10. It is 13. It is common thing to have 10 losers in a row. 15. And the larger is the sample size. If you have 1,000 of trades, 1 million trades, your largest amount of losers in a row, very unlikely, but randomly it can be 20 losers in a row. I suppose it can be. Worst case scenario, let's put it this way. Okay, now you also notice those deviations. Yes, sometimes they are pretty good, coinciding with backtests, sometimes they are not that good. 45. Okay. So stop judging your trading by 20 trades, start judging them by thousands of trades. Keep in mind that even having a 55% probability, you can face 10 losers in a row. And now let me draw something for you. Let me put it this way. This is my drawing panel. For example, you have your equity curve, and then you have 10 losers in a row. And then you start recovering, and then you have 10 losers in a row again. And then you start recovering, then you have 10 losers in a row. This is absolutely random. Random. It might happen to every one of us. Yes? And only then will you recover. So after you lose almost everything you have previously generated, you say, okay, I've been trading for 6+ months. Yes? And I generated nothing. This strategy is complete bull something. Let me not use this anymore. This is how you quit. This is how you fail. Okay, well, that's it about probability thinking. This is what you need to keep in mind when you are placing your trades. You need to know how much you're risking, you need to know how much you can potentially generate, you need to know what is your probability, what is your success rate, what is the probability of hitting the winner. You need also to keep in mind that you may have those losing streaks, and you also should keep in mind that the deviation of true accuracy, yes, and the deviation that you have currently is maybe very, very large. 12% deviation is pretty simple if you base your if you judge your trading results by last 20 trades. Your deviation may be very great. Well, that's it that I wanted to say within this video. Until then, good luck, good trading. Hope to see you soon.